Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, some Chinese and Japanese data may be suggesting the sagging growth trend could be turning. Firstly, however, American consumer prices rose 1.9% in the year to March, which was the most in 14 months. It was also slightly higher than analysts' expectations. The lift was driven by rises in medical care, food and housing, but the underlying inflation trend remained benign against the backdrop of slowing domestic and global economic growth. In fact, today's release of the minutes of the last Fed meeting show they see little need to change rates this year. And that is because they see muted inflation along with greater risk to the American economy from the global growth slowdown. One thing not muted, however, is the growth in the US federal budget deficit. Although it came in lower than expected in March, prior months were revised up. In the past 12 months, it stands at a deficit of more than $870 billion, which is 18% higher than the same period a year ago. This has risen to 4.3% of US GDP. Japanese machine tool orders rose for the first time in 4 months, up 1.8% from February, a welcome change even if the rise wasn't quite as high as analysts expected. In China, there are signs their housing market is turning up again, with some key developers reporting 20% rises in sales in March. The ECB reviewed rates overnight and left all their settings unchanged. The main takeaway from today's meeting is that the ECB officials reckon EU growth has stopped weakening even if the downturn has been longer than they expected, and that inflation seems to be edging closer to their target of 2%. In Australia, their election date is set to be announced later today as Saturday, May the 18th. And a senior RBA spokesperson has acknowledged that they are watching their housing market even more closely, especially around the level of mortgage arrears and negative equity. However, he also said they don't expect to have to cut their benchmark interest rates anytime soon. US Treasury 10-year yield is softer today at 2.47%, and that is another 3 basis points lower than this time yesterday. Gold is up another $4 and now at $1,308 an ounce. US oil prices are on the rise, now just over $64.50, while the Brent benchmark is just on $71. Stronger than expected American petrol demand is behind the lift. And the Kiwi dollar is a little firmer this morning at 67.6 US cents. On the cross rates, we've dipped a bit to 94.4 Aussie cents, but against the euro, we're still at 60 euro cents. That leaves the TWI at 72.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.